Hey y'all, Jen Hernandez, Loan with Jen. So PMI, you want to know how to remove it, whether if it's an FHA loan or a conventional loan. There's different ways for both, and stay tuned. We're going to go over that when we come back. Okay everybody, welcome back. So, private mortgage insurance. Hopefully you've watched my video about what is mortgage insurance. Now you have it, or you're going to have it when you buy your house. How do you get rid of it? So first we're going to do conventional loans, and then I'll talk about FHA. On a conventional loan, PMI is waivable in two different ways. The first way is just payment. Like, you buy the house for $100,000. This is a super easy example. You buy the house for $100,000. You put 5% down, so you're borrowing $95,000. When you pay the loan down with hard, cold cash to $80,000, you're at an 80% loan to value. The PMI goes away. Okay, it just disappears. Now, the second way on a conventional loan that you can waive PMI is through appreciation. So let's say the same example, you bought it for $100,000. Let's say after a year or so, you think it's worth $130,000. I don't know, you live in just this hugely appreciating area. Let's just say you think it's worth $130,000. Now, PMI companies, it's at their discretion, but the hard and fast rule is really after, they want 24 payments from you, 2 years worth of payments, in order to use appreciation for the calculation of the 80%. So if 2 years has passed, if you've made payments on time, that's the clincher, is 2 payments on time. That's the purpose of PMI. Then you can call your lender, whoever your lender of record servicer is, ask them how to remove it. They're going to give you a list of local appraisers in your area. You get an appraisal. The appraisal comes in at, let's say, $130,000. The 80% calculation is taken off of the $130,000, and as long as your loan amount is below the 80% threshold at that time, then PMI will go away. Okay? Now let's hop over to an FHA loan. So FHA is a little bit different. FHA, remember from some of my other videos, is super lenient. They want their money because they were taking a ton of risk by making a loan to someone that has either lesser credit, higher debt, or whatever. So if you put 3.5% or 5% down, PMI is for the life of the loan, as long as you're in the loan. So the only way to get rid of it is to refinance. Sell, refinance, pay that loan off. Now the other option is if you put 10 or more % down, so 10, 15, 20, 50, whatever, you have to make at least 11 years of payments on the PMI. So after 11 years, it'll go away as long as you're below the 80%, which after 11 years you should be, okay? And of course you've been paying on time. So I hope you found this video super, super helpful. We'll talk to you soon. Legacy Mutual Mortgage is an equal housing opportunity lender. The opinions expressed here do not reflect those of Legacy Mutual Mortgage.